Welcome back to the Traders Network. I'm Michael Yorba, your host. Thanks for joining us. We're also streaming to you live on yorbamedia.com. Thank you, everybody, for all your participation in the shout box. I'm going to get Norm's number out to you on the shout box. But this segment, we've got Nick Santiago, President and CEO of In the Money Stocks. This guy is the Babe Ruth of the show. This guy steps up to bat and knocks it out. So take all the strikeouts that Babe had and add all of the home runs that they've had, and then you got Nick. Nick, thanks for coming on the show.
Thanks for having me again, Michael. Appreciate it.
You're welcome. Now, I've got a friend of mine, Simon. He's fresh in from London. He's got a lot of questions for you about Euro and the banking sector and what's going to happen this weekend and stock indexes. So he's going to chime in a little bit. His background, just so you know, because the first time you've met him, is investment banking, particularly in the fixed income area of bonds. So, but let's start with, you're going to talk about the dollar first, right?
Yeah, I'm going to talk a little bit about the U.S. dollar. One of the things that we're looking at right now in the market is when we watch the dollar, is the market's obviously just trading inverse to the U.S. dollar index. So when the market does rally, it's usually because the dollar is falling. Even intraday, you can see the market has bounced off the lows today. We're down about 180 points, only down about 95 now, all simply because the U.S. dollar index is declining. Now, what I saw last night from my subscribers was basically I told them I've been looking at a few long plays out there, but I didn't want to enter yet because the dollar was giving us a little bit of a bullish consolidation pattern and may get a little bit of an uptick for a day or two. And basically, right now, what you want to watch is the dollar. When that dollar declines, and it should decline again sometime throughout this month, and that will cause this market usually to go up a little bit more. But really, traders just need to focus on that U.S. dollar index as much as any chart at the moment.
Nick, do you see the dollar strengthening next week based upon whatever outcome of the euro crisis? Do you see that happening?
Well, I think we have a chance for some short-term strength, but ultimately I think the dollar is going to probably pull back one more time into the new year. I have a couple of smaller cycles right around this period right here. As you know, you have the big European summit. This time around, I think more along the lines, today's market decline was more of a scare to the people in charge over there in the European Union to tell them we have to do something big here. These markets are going to tumble. So I foresee two scenarios. One, the 18th is a pivotal date for me. If the markets pull back into the 18th, that's where we'll rally, probably around the 19th or 20th, going into the new year. If the markets rally up, we're going to watch for a pullback around that time.
Okay, well, let's define the market. Dollar or S&Ps?
S&P. Okay. S&P, when I say the market, S&P. But looking at the dollar, you got a little bit of short-term strength today, but overall, I think the dollar's setting up for one more pullback. Okay,
got it. You got a resistance level, and then the other way?
Well, right now, if the dollar can break below basically 78 on the U.S. dollar index, we're probably going down to around 76.50.
Okay, got it.
That would cause the markets to make a nice move to the upside, and they'll inflate. If the dollar rallies up, I really don't think the dollar gets above 79.50 at the moment.
Okay, we've got some cycle dates that I do. My cycle work is coming down between now and say Monday. And how does that fit with your work?
Yeah, I also I don't have anything. There's a lot going on right now where it can be volatile, but I got to be honest, Michael. I'm on pause mode, and even from the last time I was on your show, I said the market's rallied up. Maybe it goes a little bit higher from here, and we're going to wait on pattern.
Right.
So I'm not in anything long on the S&P. I am holding some semiconductor holders trust, the SMH, on the long side right now with a stop in the money, well in the money. But I'm really just sitting, waiting on the pattern on the S&P. Today's action is actually refreshing to see.
Yeah.
I don't want to see this market go up every single day. So I'm actually glad to see a little sell-off today. And if we could get a nice pattern over the next few days, I think that could set us up. Next week's options expiration, so you get a lot of institutional game playing. However, that would set us up. A pullback next week ultimately would set us up for a nice bounce after the 18th of December.
Okay, I got it. Let's, if I can, switch to the currencies. Simon's got several $100 million that go one way or the other in
$2 billion.
Okay, sorry.
Even a little better.
He's got $2 billion at stake here on what's going to happen with the euro and what's going to happen with the meetings that are coming up this weekend. I wanted to know if you could talk to him a little bit about your impressions about that, because you've got we're going to talk about the FXE and the euro, and he's really on edge to try and get a handle on that.
Yeah, well, I'm in the camp that the euro is going to hold up. Worst case scenario that I can see right now is the euro goes back to 131, but I don't really see it breaking there at the moment. Looking at the FXE, the chart pattern is telling me it's consolidating to make one more push up. My big decline in the euro is not going to come until the new year, and that's what my analysis is. And that's how I'm going to play it. As you know, Michael, I went short the FXE at 141, excuse me. And traded it all the way down to 132, which was, picture perfect. So I'm looking for another pop in the euro soon, and that will be the next leg up before we roll over in the euro versus the dollar.
Okay, do you got any questions, Simon? Then let me bring that out a little bit, because that means that we should have a positive information out of these meetings that they're having over the weekend.
Yeah, that's really the core issue, that these meetings have not resolved thus far any of the issues. And so therefore, if this acts as a conclusion, which I don't think it is going to, but it certainly will set the stage for the conclusion or the breakup of the countries that are not underperforming, if the ECB doesn't indeed step in.
So I get this. Let me bring you in. Come on in on this, Nick. So what we're looking at is something that would say a positive pause, kick it down the road a little bit, and then another place where it's actually going to turn negative. Is that where you're seeing, technically speaking?
That's exactly what I'm looking at right now. I think right now this is a little bit of a trap. The euro will strengthen probably over the next month a little bit, and then it rolls over. But all we've gotten out of it, I don't even know the extent how big this situation really is. But if it's as serious as some say it is, and I have a tendency to think that it could be, they're gonna kick the can down the road just a little bit. But the leash is getting shorter and shorter. We've been kicking this thing for 2 years now. Mm-hmm. So, the rope is getting shorter and shorter, and at some point somebody's going to tug on it, and there's not going to be any rope left. So, I think at best we get this one more pop in the euro. How high it goes, I'm not exactly sure. Maybe you could get a move to 137, 138, and then I think it's lights out.
Okay, real quick, I've got a question for you from Nevada in the chat box, and then I want to move to the financial stocks, because that's another big concern for Simon here. Nevada wants to know how high for the Christmas rally.
Well, what I've told my subscribers is that generally we're looking at two scenarios. One, we go to double top, which was the conservative level, which would be the October 27th high. In the S&P, that would bring us basically to around the 1292 level, and ultimately, I think we have a chance to get to around 13.25.
Okay, all right. Now the financial stocks.
Okay, I'm looking at all of these financial stocks, and one thing I had sent out to my subscribers, or I had told them the other day, was that the XLF, which is the financial spider, ran up into a 618 retrace, and we had a tremendous move since November 25th into November 7th. So we were due for a little bit of a pullback, and we'll see how that's trading. But ultimately, we could have some more upside here. I think to say $14 on the XLF is not a stretch by any means at the moment.
Anything special in the XLF makeup that you're because you brought out J.P. Morgan, blah blah blah.
Yeah, well, I'm always following J.P. Morgan. I think that's like my baby. So I like to watch J.P. Morgan. Gives us a good heads up. But what happened was J.P. Morgan really rocketed up to $34. It's really just consolidating there. It's putting in a little bit of a base. Now today is a very, very ugly sell-off, but the volume on today's sell-off is terrible. There's no volume in this market today. So that tells me there's a little bit of fear out there going into this European summit. Mm-hmm. However, if this stock can base, for a few more days, it's got a legitimate shot to work its way up to around 35 and a half. on J.P. Morgan, and then, I think that's where the real trouble comes back into this market.
Now, I've had some people here tell us that sometime in January, and you're one of them, but not be that specific yet. Sometime in January, they're looking for a turnaround, and that's about the end of this rally. Can you shed any light on that before we close out?
Well, I think that's a very good possibility. The one thing about January is it's always tough to pick out that first pivot. A lot of traders watch the first week of the year and see how it's going to react, and if the market finishes positive, and that will be a good indication for the rest of the year and so forth. I'm not one of those guys, but I think that the market gets a lot of artificial propping in the beginning of the year, and then you have people that or traders and investors that didn't take tax loss selling this year or gains, and they'll try to sell next year. So January is a tough month to predict really anything. But I usually will look for a January pivot.
Okay, that sounds good. You know what? I was going to ask you about the yen, but let's do this. We've got a guest that wants to know about the yen. Give me a phone number so our guest can follow up on a conversation after the show and talk to you about that question.
Yeah, well, you could always reach us at InTheMoneyStocks.com, and if you want to give us a call, you call us at area code 212-380-1578, and we also offer a 7-day free trial. You can see what we're made out of. You can follow our trades, come into our chat room, talk to us live throughout the entire trading day. We'll give you our setups, and if you join the Research Center, there's a lot there for everybody. It's overwhelming sometimes with all the stuff that we put out. Yeah,
and by the way, ladies and gentlemen, like Simon alluded to earlier, all you have to do is go back to the archives and see how accurate, especially this guy is, and you'll be very, very impressed. It's a must-do to get into those rooms with Nick. Thanks, Nick. Thanks for coming on the show. We'll see you next week.
Thank you, Nick.
Very much.
Thank you very much.
My pleasure.
Thank you, Simon.
All right, everybody. That was Nick Santiago, President and CEO of InTheMoneyStocks.com.